It's about that time of day again here, boys and girls. You know what time it is. 8 o'clock Eastern Time, Monday through Thursday. Welcome back to our nightly newsletter. Today is Tuesday, June 3rd, 2014. We are cruising through the first week of the month of June. Month of June's a pretty busy month. We got, of course, beginning of the month, we got inflows here coming in from all directions. We got a quadruple witching week this month of June. A lot of stuff happening in June. But we have an exciting nightly newsletter in store for you today. Now, first of all, did you make money off that Russell? Please tell me you listened to me last night and sold short the Russell. If you didn't, you're missing out on easy money right now. Guys, hold on tight, because on tonight's newsletter, we got some very important information to give you guys and gals this evening. First of all, we'll talk about what happened in the markets today. Gold grinds lower, crude trades sideways. Well, I should say crude was comatose. I feel like somebody gave crude a sleeping pill today. Hopefully tomorrow will be a little bit easier for us. Look for that. And the Russell, just as we described last night, pushes lower. So markets were moving pretty much as we expected today and made some great money today on the Russell. We'll talk about that in a moment. Once we're done looking at what happened today in the markets that we trade most, we're going to move on and get ready for tomorrow. We get a busy day full of news starting tonight coming out of Asia. We've got a lot of news tomorrow morning in Europe and a bunch more Red Star news in the U.S. Are you excited? You should be. That Red Star news is going to give us many different trading opportunities on Wednesday morning, actually probably this evening. And then last but not least, you know me, I'm going to save the best for last. At the end of the newsletter tonight, we're going to roll up our sleeves, we're going to grab some charts, and we're going to get ready for tomorrow's trading opportunities. You ready? You stretched out? You get your helmet on, mouth guard in? I'm just fooling with you. It's going to be a great newsletter. Before we jump into the charts, before we dig in here this evening, I want to remind you all, if you're watching this video right now on anything else besides our blog, if you're watching the video right now on our YouTube page, make sure you click the link below the video, right in the information of the video, and get over to sidewaysmarkets.com. Over at Sideways Markets, I'm going to encourage you three different things here, three important things here on Sideways Markets. First of all, right below this video on our blog, you can click to download today's newsletter charts. I was just talking to some students today in our live trade room. Every morning we use our newsletter charts from the night before as our roadmap for the following day. Remember, the charts I'm giving you right now are going to be useful tonight and all day tomorrow, possibly for the rest of the week, depending on how much movement we get here in the next few days. So remember, get your hands on those charts, all right? And don't forget to send these to a friend, right? Don't hog all the great information to yourself. Send a friend a copy of these charts as well, and don't forget to tell them where you got them. Second thing is, upper left-hand corner, I want to welcome you guys into our trade room tomorrow afternoon. Take me up on this offer. I have a free pass for you to attend our trade room. Don't miss out on this opportunity, guys, if you want to know how we use the levels every day that we get off the newsletter. That's right. This newsletter, I work very hard every evening to put it together, and we use it all the following day. Come out and see me tomorrow afternoon. Take me up on the free pass offer. You will not be disappointed. And of course, I'm going to encourage you guys, if you want to make sure you never miss a newsletter, give me your name and your email address. I promise not to let you down. You're going to love the material we send to you guys every evening at 8 p.m. Eastern Time. Alrighty? Now that you know why you got to get over to sidewaysmarkets.com, enough chit-chat here, JJ. Let's get right into it. Roll those sleeves up here and let's begin here. We'll talk about what happened today in the markets. First of all, talking about crude oil, the old black gold. We know, of course, crude's been a little bit sloppy recently, right? They're clearly waiting on something. You've got the issues in Ukraine, keeping prices propped up. You've got this overall slowdown in Europe and Asia. At least that's what the news reports tell us. And it looks like we've got a little bit of everything, right? Ukraine keeping prices propped up, but we're moving lower here over the medium term right now, albeit slowly, right? Quite slowly. But we have a pretty good idea what's going on here. Crude's waiting. Maybe they're waiting to see what happens in Ukraine. Maybe they're waiting to see what the ECB does on Thursday morning. It doesn't really matter to me why they're waiting. But one thing is for sure. The last few weeks for crude oil really highlights one of the most important lessons that I learned as a very young trader many years ago. I made a critical mistake in my career by learning a strategy that only worked on one market. Yeah, that's right. When I was a brand new trader, I learned a strategy that only worked on the S&P. All right. And what happens is, if you have a strategy that only works on one market, well, then what happens if the market goes sideways like this for a number of weeks? What do? I can't call my landlord here at the office and say, sorry, I can't pay the lease this month because Crude hasn't moved. I can't do that. I can't give my mortgage servicer an IOU, right, as much as I wish I could. Sorry, I'm not getting big ranges this week on Crude. Can't make my payments. No, you can't do that, right? So what does a trader do when a market's not moving very well? Do we just give up and sit on our hands and hope for the best? No. A real trader takes control of the situation. We take responsibilities for our own trades, right? The market's not out to get me. I take responsibility. That's the first step, taking responsibility. The second step is, and I tell this to all of our students, and I say this at least once every evening, we can't change the game. What do? We game the game. A professional trader says, I can't change the game. I'm not even going to try to. I can't force this market to move. So what I can do is, I've got two options. I can treat this as a sideways trading range. What does that mean? It means I'm buying lows, I'm selling highs, right? I'm staying the heck away from the middle. I can treat this as a sideways range, and I can do my best to buy those lows and sell those highs, right? That's one way to do it. That'll be the best way to trade this market right now. But of course, what I would recommend is to use a strategy that is universal. And that's exactly what we do every day in our trade room. This morning, believe me, just like many of you, I woke up, I had high hopes for a big range day on Crude, and then, right? We sit here, we got 51 ticks of range. Now again, this isn't going to last forever. It's not going to last forever. There are clearly some geopolitical aspects that are dragging this volume down, dragging down the ranges right now. It's not the end of the world as long as you have other options. Okay? Just like any smart business owner, and we're all business owners as day traders, we have to be hopeful for the best, but ready for the worst. Today on Crude, we saw a narrow range. We closed pretty much exactly where we closed yesterday. I shouldn't say that. Our volume was right where we closed yesterday. You can see here, though, again, 51 ticks, 5-1. What? That's about, that's about 25%, about a quarter of what we were seeing this time last year. So just to give you an idea of how narrow this range really is right now. Now again, I don't want to make this sound like Crude's dead, we're done trading Crude, because we are definitely not. In fact, narrow ranges usually result in big ranges coming soon. So hold on tight, right? We're not done watching Crude, that's for sure. But right now though, we need to be aware that if you're looking for big ranges on Crude, you're in the wrong spot. All right? So we got narrow range today, opened in the middle. We pretty much opened exactly where we closed. That doesn't happen. Not on Crude it doesn't. We don't open 15, 16 hours after we close in the same spot, boys and girls. It doesn't happen. It's like making a 4-year-old child sit in one place for 3 or 4 minutes after they've drank a couple bottles of that Jolt Cola. Remember that stuff back in the old days, right? They swore it gave you, superpowers, right? But guys, Crude doesn't do this. So it's different. Something's keeping this price from moving. I don't know what it is. I don't care what it is. All I know is if I keep seeing this stuff, I'm going to keep trading as a range-bound market, buying lows, selling highs, and of course also looking at other markets to make my big ranges. All right? So very neutral right now. You can see here we're right around the prior week low. We're basically stuck between the prior week close and the prior week low. Now heads up. I don't know how this is going to work right now because we got a lot of resistance on another chart, which I'm going to show you in a moment. But it looks like we have a wide open space right up to that prior week open. So it tells me if we can get these buyers to kind of catch a bid or two here, right? That's a term for buying this thing up, catching a bid, right? Bid and ask, right? That's where the term comes from. You can see we have a bit of a channel going here right now. So if we did happen to catch some buyers here this week, keep an eye on that 104.12 area, right? That's the prior week open. That would erase all of these losses from last week. Again, I've got another chart for you though, so stick around. I'm going to show you more about what my plan is here on crude. But a very, very sluggish, very quiet, and I wouldn't say disappointing, but that's about what we're getting right now out of crude. Moving on to gold. Gold is another market right now. Again, if you've only got a strategy that works on gold right now, what are you doing? You're not doing much, right? You're selling at whatever option you can. I've got some opportunities for you on the next chart, so stay with me here. I'm going to give you some strategies for gold for tomorrow. But as of today, though, 72 ticks of range. Now, we know that's narrow. We know gold is most definitely waiting on Thursday morning's 7:45 a.m. ECB announcement. We'll talk more about that in a moment. As you can see here, we're pretty much right inside the prior week low, right? Just above that prior week low. We made a dip down today. But again, this market is opening right in the middle, neutral open, neutral close, volume piling up right in the middle of the range. There's no surprise here. No surprise here at all. Sideways, consolidating. Now, we know what they're waiting for. They're waiting for Thursday morning's announcement. Thursday morning announcement is going to be big for currencies, and which, of course, is always big for gold. If it affects currencies, if it has anything to do with interest rates, you're definitely going to see gold react accordingly. So right now, again, narrow range on gold, consolidated market once again today. We're definitely bearish, but we're range bound, right? We're grinding lower, as we call it. Again, hold on tight though. I have a strategy for you guys for tomorrow here on gold. And then here we are, the big mover of the day, 130 ticks on the Russell today, the mighty mini Russell. Now, the Russell ain't out of the woods either, all right? Let's be honest here. The Russell is also in a very difficult spot. I've been saying this for a few weeks now. The Russell has a very difficult next few days. I'm going to show you more about that in a moment. But as you can see right here, today we finally kind of broke free of last week's range, right? We kind of got stuck in the mud yesterday afternoon, right back above that range. Today, though, we saw, now this is what usually happens. This is classic price action. We close here, we open here. None of this, where we close and then we open the same place. What's up with that? That means basically nothing happened in Asia or London. In this case, though, we had an easy clue this morning, didn't we, guys? In our trade room today, if you were with me, we did great on the Russell. The Russell was so classic today. First clue. The first clue we got this morning was we compared the closing price yesterday with the opening price today. What did that tell us, guys? Bearish. So we got this gap down right at the open. Now remember, a gap is a tradable setup. But this gap down tells us that between last night's close and this morning's open, what happened? Something. Do I know what happened? No. Do I need to know? Hell no. I don't need to know what happened at all. All I care about is that it did happen. I don't care why it happened. All I care about is when and where. So we open gap down. That's a big clue. It's definitely a bearish clue. It certainly is not bullish. So we get a bearish clue right out the gate this morning. We looked at our VIP charts from last night's newsletter where I gave you guys specific selling opportunities for the Russell today. And this was the best part. I think this was the best part about today's trade room, was that we witnessed it go right higher. And do you remember what we talked about this morning? Wait it out, right? Now, my exact words were, let's wait for this price to get up to those highs again, and let's sell it right back down. And that's exactly what happened. The beginning of the morning, it looked like the bulls had taken control. But we stayed patient. We didn't force it. And sure enough, we were rewarded by the nice, easy sell-off, right? Middle of the morning, late to the morning. And then, of course, you had your short covering rally, right, that took this price back up in the middle. Just a classic situation of using the opening bell analysis, which we are notorious for in our trade room. We do a morning prep every single morning. This morning, we identified a bearish Russell. We looked at last night's newsletter charts, which you guys should be doing too, And we said, all right, we want to sell short. We get a gap down at the open. We're bearish at the open. Then all we had to wait for was for price to finish going higher. Once it finished going higher, we had a nice reversal pattern off the highs and off of the races we went on the way down. So a very, very successful day of Russell trading. And we used last night's newsletter along with the first thing we saw this morning. I teach this to every single one of my students, and it's a very, very effective way. And in such chaotic markets right now, it still holds up like a rock. It's a very, very effective way to analyze the first few minutes of the session. Now, got a pretty typical range, 130 ticks. We opened lower, that was bearish, but we closed back in the middle. Same thing happened yesterday. We closed back in the middle, volumes in the middle. So right now on this particular chart, I have reason to believe that we are slightly bearish but very balanced. Now, why could we be so balanced? Why are we so balanced? Look at all this wide open space below me. Well, hold on tight because I'm going to get ready for tomorrow now, and I've got some great strategies for you to trade the Russell. Before I do that, though, let's make sure we remember what's on schedule for tomorrow. So now that you know what happened today, let's get ready for tomorrow, which is Wednesday, June 4th. This is the first week of the month of June. The first week of the month is filled. If you're a crude oil trader, you've got gas, basically hedgers coming in. Okay, shipping companies, airline companies, and clearly they are waiting right now for that report on Thursday. Maybe they're waiting for tomorrow's inventories. I doubt it. But we've got two big news reports, one on Thursday and one on Friday. So I'm telling you right now, get ready for some big fireworks on crude oil, hopefully later this week, if not early next week. Because at the beginning of the month, all the shipping companies, all the airlines, right, everybody who's affected by crude oil in their business, all right, imagine you're a shipping company right now. What's the biggest threat to your profitability? All right, no, it's not heavy packages. You charge for that. It's the cost of crude. If you're a shipping company, it's gassing up the airplane, gassing up the trucks, right? That's the most volatile variable of your business model. So you pay professional hedgers to go into the market every month, make an educated guess on where prices are going the next 30, 45 days, and hedge your business. That's why I say expect some fireworks on crude. But clearly they're waiting on Thursday or Friday's news. So it may not be until next Monday when we get that rebalancing after Friday's non-farm payroll number. All right? Now, let's talk more though. Tomorrow, before I go to tomorrow's news, we actually have news here. Oops, sorry about that. We got news here for you tonight. Starting this evening, we've got news here at 9:30 and 9:35. We've got GDP out of Australia, and we got the Purchasing Managers Index out of Japan. Those are two Red Star news. Be aware of that if you're trading the Asian session this evening. All right, 9:30 p.m. Eastern Time. So you don't have to wait very long to get some Red Star news here going into tomorrow. All right, that's this evening. Now, moving into tomorrow. You do not need to adjust your television set. Look at all this Red Star news. 3:50, 3:55, 4 o'clock, 4:30. Now we go to GDP in the EU, 5 o'clock. So guys, take your pick. Starting at 9:30 tonight, we then go to 3:50 tomorrow morning. I've got news from the big countries in the Eurozone. We got some big important news. It's all Red Star news for tomorrow. So that tells you right now, 3:50, 4 o'clock, 4:30, 5 o'clock, you've got some fireworks happening in the U.S. session. Then we jump into the U.S. morning session, all right, 8:15 a.m. tomorrow morning. We get the ADP employment report. Now, this sounds pretty darn important, right? It sounds a lot like the employment report on Friday, but it's not, all right? This would be Friday's non-farm payroll. This is the little cousin. Right? This is the stepsister, all right, of the non-farm payrolls on Friday. This ADP employment report, it's a minor news event, but it's going to give us a good idea of what's coming down the pipe on Friday morning. You're not going to see a big reaction to this report. You're going to see most analysts, though, will mark that number down, and they're going to see how it compares to what they were thinking for Friday morning's report. All right, so 8:15, you're not going to see a big reaction to it. I find that 8:15 news on Wednesday morning ahead of non-farm payroll usually just slips right by you. right? You don't even notice it's there. The big news now comes 15 minutes later. The big news in the U.S. is going to be the international trade at 8:30. We've also got a couple other news reports here at 8:30. We got international trade. That's the big one. And this is a big report these days. The international trade number is a big, big leading indicator for global economic strength. Basically, if we are if we're exporting our goods and services, that means emerging markets are buying, the rest of the world is consuming. So there's a lot of wisdom, there's a lot of important clues hidden inside of that international trade news number, right? If we have a strong export, all right, if we have a positive trade balance, basically. Now remember, the United States is a country of consumers. We've had a negative trade balance for 40 years. And we've been the laughing stock of the world, right? Oh, those crazy kids in the U.S., all they do is consume, their reality TV shows, their .com, but right? We all know what people say about the U.S. Now, remember, China has the same problem right now, right? It's kind of ironic how that happens, right? Because China, of course, has been fueling our consumption for the past 30, 40 years, among other things. And now the Chinese people have freedom. Now it's not just every U.S. teenager with a cell phone. Guess what? It's the Chinese teenagers too. Now we're seeing a complete paradigm shift. I can't wait to see where this global economy goes in the next 10 years. Because China is also dealing with a very big trade deficit now. That means that China is actually importing more than they're exporting. If that doesn't blow your mind, I don't know what does. All right? Think about that for a second, and we'll come back and talk more about that tomorrow. All right? But tomorrow morning, though, 8:30 a.m., we get a really important number at 8:30. International trade. What is our trade deficit going to look like? Because that tells us the strength of consumers from around the world. All right? People know our products as being high quality. They want our products. Everywhere else in the world, you travel anywhere else in the world, there's a premium for imported products from the United States. It's the exact opposite, right? Remember back in the 80s, you would brag about, buying a Japanese sports car or, Italian wool sweater, whatever the case was, right? Remember 20 years ago, 30 years ago? It was always we wanted to import foreign products. Now it's completely flip-flopped. It's incredible. It's incredible. Never a dull moment as a trader. So 8:30, we got news in the U.S. We also have the trade balance in Canada, too. So you're going to see a lot of stuff happening tomorrow morning at 8:30. Also, too, now we move forward here at 10 o'clock. At 10 o'clock, we got more Red Star news out of Canada. Don't forget, if you're watching any of the commodities, any of the energies right now, you've got natural gas, you've got crude oil, right? These are big, big markets in Canada, the U.S., Mexico, Russia, Australia, New Zealand. Think about all those economies around the world that have big, big industries of natural resources. Canada is one of them, so be ready tomorrow morning. You're going to see some news here at 10 o'clock that has the impact of natural gas, crude, silver, gold. You're going to see some moving markets tomorrow at 10 o'clock. We also have ISM non-manufacturing tomorrow morning. That'll also be out at 10 o'clock tomorrow. And then we jumped in at 10:30. 10:30 is going to be the big news for crude traders tomorrow morning. I hope it's enough to get some fireworks going for us tomorrow on crude. Again, we've seen some sloppy markets here this week, and we know that we got some big news Thursday and Friday that they're most likely waiting for. Tomorrow at 10:30, we got inventories. Remember, last week was a different type of week because we had a Monday holiday. So we didn't see the Wednesday inventories last week. We saw it this week, though, at 10:30 on Wednesday. What that means is you've got to be aware price action's going to be different before 10:30. What my plan is, if I'm trading crude on Wednesdays, I'm sitting on hands from 10:15 until about 10:40. It may be even later. I need to sit on hands because this is a very volatile time of the morning before the news comes out and after the news comes out. The bottom line is I have a very difficult time being confident getting into a position before that news comes out because you and I have both seen how violent it can be right at 10:30. All right? So do yourself a favor, do your broker a favor, and don't go entering into any positions unless you want to absorb some significant volatility at 10:30. And then after 10:30 comes out, I'm going to sit on my hands. I'm going to really try to figure out who grabs control of this market after 10:30. And I'm going to remind you that normally the first reaction we see to that news is normally the wrong direction. So if we see a spike up after the news at 10:30, I'm now leaning towards selling short, and vice versa. The bottom line is I can't tell you where we're going right now after 10:30 tomorrow morning. I have to wait just like everybody else. So at around 10:40, what's my trend? Follow that new trend and trade conservatively, because you got to be aware. Crazy stuff happens around that 10:30 a.m. So be careful. All right, 10:15 to 10:40, sitting on the old hands, and of course, once we get through 10:40, I'll then make sure I look at my trend, and we'll see what direction we're going in. As we move forward, we got more. There's more news tomorrow. Jeez Louise, Beige Book. Now Beige Book at 2 o'clock. Now here's the deal: when you have news in the early afternoon in the U.S., you've got to expect lunchtime, which usually goes from 11:30 a.m. until 1:30 p.m., right? That's typical lunchtime in the U.S. Not going to happen. What's going to happen is now that lunchtime is going to move forward. So now lunch tomorrow will be approximately 11 a.m. until 1 p.m. Eastern Standard Time. Why do they do that? Well, that's so that all the pit traders can go get their $5 footlongs at Subway and come back so they can watch the report. All right? They're not going to time it just to come back at 2 o'clock or 1:30. So when you see a news report that is early in the afternoon, I'm not talking about 4 or 5 o'clock in the afternoon. I'm talking about 1 o'clock, 1:30, 2 o'clock. You're going to see that lunchtime shift a little bit earlier. So what that means is, that if we're trading crude tomorrow at 10:30 or 10:40, we only have a little bit of time after that news comes out to make our money before traders start hitting the exits. So at 10:30 tomorrow morning for crude, and then we jump down to 2 p.m. for the Beige Book tomorrow afternoon. Tomorrow night, we got more news out of China. We'll talk about that on tomorrow night's newsletter. But as you can imagine, that's another Red Star news event. So to recap here, news starting out tonight at 9:30. We then jump into Europe. We go at 3:50, 4 o'clock, 4:30, 5 o'clock. I've got news at 8 a.m. tomorrow, or 8:15, I should say. 8:30, international trade. Big news tomorrow at 8:30. We've got news out of Canada at 8:32. Then we jump down at 10 o'clock. Another Red Star news number out of Canada. Remember, think natural resources. Think energy markets, right, when you see Canada's news. And then, of course, we hop, skip, and jump from 10:30 down to 2 o'clock. Remember to be careful around crude tomorrow, and remember that lunchtime session is going to be a little bit earlier tomorrow morning because of the 2 o'clock Beige Book. The 2 o'clock Beige Book's a pretty interesting news report, right? It's going to be the basically the notes from the Beige Book. It's kind of like the FOMC meeting minutes. The FOMC meeting minutes are the minutes, the notes from the last FOMC report. The Beige Book is actually the actual journals or the registry from all the Federal Reserve banks from around the U.S. So it's going to give you a lot of insight into our next FOMC meeting. That's what's on schedule for tomorrow. Whew, that's a lot of stuff for you guys tomorrow. As you can see, there should be no problem finding some opportunities to make some money tomorrow. Moving forward here, over to the crude. As you can see here, we are still stuck right now on crude, right in the middle of this range here. We are pushing higher, but as you can see, though, we are pulling back right now. How far are we pulling back? Let's find out. I go now to my next anchor chart. I can see here, I'm looking to pull back to this 101.45. So that would be the ideal pullback on this crude right now, 101.45 to 168. That's where we're going to get the best buying opportunities here on crude. And then I've got targets overhead. Targets overhead will be at 104.68, 106.56, and of course we got that trend line here that we can use as well. Now that obviously is not going to help me out too much right now, right? Not going to help me out too much right now. Unless we collapse here tomorrow, I've got to wait here to get that 101.45. So how are we going to trade this? Let's go one time frame faster. One time frame faster now shows me here. Now look, you got 101.44. Okay, keep that in mind. Keep that in mind. And now look at this chart. 101.44, right there. Okay, looking good. So that's where we're aiming for. Okay, that's where we're aiming for right now. And over the past few days, we've had great selling opportunities here on crude. And you can see here, when I zoom in a little bit closer, now we have the opportunity here to get short. 103.11, 103.24, 103.30, 103.58, 103.99. Don't forget, we've also got this channel, okay, this channel high, this trend line at the high, that will also be an option here for us as well. And then I got two targets down bottom here right now. I get a seller's target number 1 at 101.87. Seller's target number 2, 101.44. Again, 101.44, right? Write that number down. That's your magic number this week. 101.44. That's where we're headed to right now. One thing you can see though, and this is going to look a lot like the Russell. The Russell and the crude are very similar right now. I want you to see a couple things here. If you're a student of mine, we know this green area, this is the long-term trend, right? The red area up top, that's the short-term trend. What do we have happening right now? Right? Bam! We got collision happening. Long-term buyers are meeting short-term sellers. All right? It's a big deal. That's what's causing this chop and slop. We can't quite get below the long-term buyers. The short-term sellers are trying to force this thing to go lower. And that's clearly what's keeping, at least as far as I'm concerned, technically speaking, that's what's keeping this price from really tumbling. Now, fundamentally speaking, again, we've got Ukraine, we've got the issues and the slowdown in Asia. That's what's kind of keeping this thing propped here, almost levitating here, right around this 103 to 102.50 area. All right, 102.50 has been a remarkable stumbling point for about 2 days now, right? 2.5 days now. So you know the plan. I'm selling short as I go lower. I'm right about where I need to be right now. So every new lower low, I'm on the sell side here. Targets at 101.87 and 101.44. All right, there's your strategy there for crude. Now, speaking of difficult charts to look at, here we go now. Oh boy, back to the Russell. And everybody's saying, oh, there he goes again. There he goes again. Back on this ugly Russell chart. I've been talking about this for weeks now. Well, maybe not weeks, right? What, about a week and a half, 10 days, something like that? We have this danger zone right here. We're stuck between now, same thing. Short-term sellers, long-term buyers, right? Record skips, and now all of a sudden we're stuck. We've known about this for a while, and I've been telling you guys, just be aware of the situation. It doesn't mean you can't trade it. It just means that for right now, we have a traffic jam going on in the Russell. I've got major support below me. I've got major resistance above me. And with this pending ECB announcement with non-farm payrolls on Friday, nobody's going to put any real risk in the market if they don't know what that news looks like later this week. So without any big money taking big risks right now, you're not going to see this thing move out of this area. So be aware. If you're wondering what's happening right now in the Russell that makes to kind of keep those ranges a little bit narrower, now you know why. Moving forward here, we know we're stuck in the mud here. Okay, we go down to the 89 anchor. On the 89 anchor now, again, you can see here, we've bounced off the resistance. We've got all the moving averages right there. They're all literally right there, all on top of each other. That does not happen very often, guys. It does not happen very often. We have all of our key moving averages on top of each other. That's what's keeping this price from collapsing. So again, you can see a little bit of a different viewpoint on this anchor chart. We're definitely going lower. We're definitely bearish in the long term here. But you can see, though, we're getting a little bit stuck in the mud right here, right around this 1124 area. Now, how about a strategy for tomorrow? All right, how about a strategy here for the good old Russell tomorrow? First of all, if you took my advice last night and you sold these highs in the Russell, you got paid. You had a nice paycheck here this week in the Russell. So we've made some great profit in the Russell this week, and now we got a big problem. You see what's happening right now? Yeah, we're still bearish, but again, you can see here as I zoom in, we've got major levels of support, and then of course we've got a resistance zone overhead as well. But let's zoom in here and let's take a look at the big problem we have. The big problem we have right now is that, again, just like on crude, I have the long-term buyers coming in, the short-term sellers coming down, and then all of a sudden, right, we get stuck in the mud here. This is going to continue. And again, because we have that pending news on Thursday and Friday, I just don't see any real big commitment from the elephants, from the well-capitalized fund managers, the large locals. I just don't see it. At least I don't think it's going to happen. I hope I'm wrong, but I don't think it's going to happen. So here we are. We definitely are still seeing lower lows. We're seeing lower highs. We're definitely bearish, but just be aware. All right, you get that 1121. That's going to be a big support level. We've broken it a couple times. We just keep getting sucked back up into it, as you can see. So we're right back at the highs right now. We get a green light here to keep selling short. So I'm going to keep looking for selling opportunities here as we go lower. Now, we just barely missed that target today of 15.3. I know. JJ, what were you doing? Were you sleeping on the job last night? You've been drinking this afternoon, son? Right? As you can see, I just barely missed it. I must be getting a little bit lazy in my old age here. The low of that was at 16 even. So it did go. It went close. I thought we got closer than that. Did we get closer than that today? You're right, 16 even. So we missed it by 7 ticks. Last night on the newsletter, I told you my target was at 15.3. I got taken out of my trade today in the room on a trailing stop. All right, trailed my stop, final target 15.3, didn't get the final target filled. We are not done with you though tomorrow, Russell. 15.3 is still in the mix, 16.9, 10.2, 12 even, 041. I'm using all these numbers, all these levels are my targets. As we go lower, I'm looking to sell 1130.6, 1134 even, 1139, 1141.9. I am also at the top of that channel, which means as soon as we start going lower again, you know what I'm looking for. I'm looking for more selling opportunities. So we got new lower lows. We're still seeing lower highs. We've got this trend line channel here. Don't forget to use that as a reason to sell the highs and take your profit off at the lows. So great target down here are going to be the lows of this channel as well as the 10.2. So 15.3, 10.2, 12 even, and 04.1. Use those levels below as your profit targets. And again, don't say I didn't warn you. It's likely to be sloppy here until we get through Friday's non-farm payroll, right? So on our best behavior here tomorrow and Thursday. Alrighty? Now you know my strategy here for the Russell. And then, oh, jeez. Gosh, put this chart away. You're scaring the children. Yeah, it's ugly. It's ugly. Gold dropped, of course, this week. We're still slopping around on top of that target at 1240. We gave you guys this target a week ago. We went right to that target, right? We cashed our paycheck on that about a week and a half ago. Now here we are. We're sitting here as we go lower. I've got targets down below me, 1227.3, 12062, 1219, 1240. These are all my major support levels. All right. So what are we going to do here? You can clearly see here we had a bullish candle today. A bullish candle, right? Kind of odd seeing that on my gold chart right now. We go one step further down the food chain, and now we see here we got this bearish channel. Again, we just trading sideways here last week, and then whoops-a-daisy, we get that big drop here that was early last week. Now, of course, I've got sell zones overhead, but guys, trying to get this gold to go back up to that 1277, yeah, right. Not going to happen right now. Maybe it does, but I doubt it. I highly doubt it. not till we hear from the ECB on Thursday. So these sell zones of 77.7 and 1300, they're wonderful, and I have a target down here around 1235. I got my 1227 here as well. Those are my targets, but I just don't simply think we're going to get there. So you know what my plan is? I would love to sell this 1277 because that would just be perfect, selling this gold at a premium price, not at a discounted price. You could also possibly look kind of in between the lines here, draw a trend line there, and you could probably also short the top of that channel too using what we call a reversal line. Members, you know what I'm talking about. But I want to show you this chart though. This is the chart I think you're going to be most useful with tomorrow. Here's and believe me guys, this takes a little bit of kind of playing around with these time frames right now because gold just does not look pretty at all. If I zoom out here, you can see what I'm talking about. There's this big drop off the highs. You'll notice a straight down, and then now we finally get some swings to work with. Remember, the previous swings in the market helped me measure these moves. So we need to have at least some price action we can work with. So right now here, again, be careful on gold though. If there's one market I'm very concerned with until we get through Thursday's news from the ECB, it's definitely gold. And this personality should be red flag everywhere for you right now. Big deal. I see we have a bearish channel. I'm looking to sell the highs of that bear channel. I'm not so confident right now telling you to buy the lows because it's a bear channel. And we know, at least my members know this, the hardest time to trade is when you're at the lows of a bear channel or the highs of a bull channel. If you want me to explain more of that, come see me tomorrow morning in the trade room, and I'll gladly go into more detail. One more time, though. The most difficult time to trade is when you are at the lows of a bear channel, okay, down here, or if you had a bull channel being at the highs, at the lows of a bear channel or the highs of a bull channel. You got to really be careful about those areas because there's a lot of funny business going on around there. And again, I'll elaborate more tomorrow in the trade room. I would love to sell the highs here, 1249.6, 1250.7, 1250.9, and 1253.4. I don't think we'll get here, but this would be even better. It'd be even better to be able to sell this 1256.9 area. That would be even better, but I don't think we're going to get there. I think this gold market is going to continue to look like it took a couple of sleeping pills here this week until we get to Thursday's news. So be careful on gold. We're definitely bearish, but the personality is clearly waiting on something. All right? As we go lower here, I can sell short, but I've got to use my targets at 1239.9, and that is 1236.9. Yep, 36.9. So targets below 39.9 and 36.9, as well as don't forget about this trend line down here. It's easy to forget the low of that channel. So the ideal scenario here is to wait for price to test the highs, look for my entry pattern short, take my entry pattern short. I do not just guess, all right? We look for a pattern. Patterns help me identify risk to reward. Very important for day traders. I got 39.9 and 36.9 for my targets. Whew! A very, very busy day in our live trade room today. We're having a fantastic week out there. I hope you are too. The month of June is always an exciting month of the year. I want to thank you guys so much for being a part of our newsletter here tonight and this week. And don't forget, 10 years ago, right, 10 years ago, my wife Megan and I created our website, SchoolOfTrade.com. We did this because we wanted to be a different way for new traders to kickstart their career. There is nothing else on the internet that even comes close. And I don't expect you to take my word for it. I want you to let me prove it to you. We got a great free trial. You're going to learn more in your free trial with me than you're going to learn by paying somebody else. All right? Give me a shot. Let me prove it to you. We offer 3 levels of membership: beginner, intermediate, and advanced. We offer lifetime memberships, no nickel and dime funny business for charts or indicators or trade room or tech support. I hate that junk just as much as you do. So take me up on my offer for the free trial. With that free trial comes a special free pass to attend our trade room tomorrow afternoon. Call me in the office. I'm on Skype. I got email. And remember, make some time tonight. Spend your most valuable commodity, TIME, take the time to invest in yourself. Get proper training so you can make the money you've been working so hard to make in the markets. My name is Joseph James from the entire team here at our corporate headquarters in sunny Los Angeles, California. Hope you guys are having a great week out here. We get some big news tomorrow. We get a lot of opportunities for you tomorrow on the charts. And I'll see you all tomorrow morning at 8 a.m. Eastern Time in our live trade room, or tomorrow evening at 8 p.m. Eastern Time for our nightly newsletter. Signing off now. Adios, amigos. Bye-bye for now.